it still meets our minimum hurdle rate of return, so 15% at a compound annual rate over 5 years. And so you'll see it in some of our more specialized portfolios.
Yeah.
We're looking for better values, but the risks to Nvidia would include cyclical. When I hear shortages about GPUs or anything, I begin to think about the cyclicality of a group. Competition. Tesla is coming up with its own chip. Meta Platforms, Google, their own chips for more specialized large language models, and then the tech itself. We're learning from Meta Platforms, the Llama model is able to do with less computing power, but more data.
Yeah.
It's able to deliver better models.
Cathie would discuss the recent price target raises for Nvidia by major analysts such as Oppenheimer and Goldman Sachs, highlighting the company's strong growth potential. Analysts see several tailwinds propelling Nvidia's performance, with sustained momentum expected through 2025 after significant gains in 2024. Nvidia's stock has surged about 150% year-to-date, and analysts believe the company has room to continue expanding beyond data centers into other sectors like gaming and automotive, making it a key player in the AI and chip market. Wood explained that although ARK Invest initially sold off much of its Nvidia stock, they remain positive about the company's long-term potential. She noted that Nvidia still meets their minimum hurdle rate of return, though they are cautious about cyclical risks, such as chip shortages and increasing competition from companies like Tesla, Meta, and Google, which are developing their own AI chip. Wood also mentioned technological advancements, such as Meta's Llama model, which require less computing power, posing additional risks to Nvidia's dominance. Despite selling a significant stake in Nvidia earlier, Wood emphasized ARK Invest's broader AI strategy, which involves identifying undervalued companies with proprietary data and AI capabilities. While Nvidia has become a check-the-box stock for many investors, Wood is pivoting toward other AI opportunities, such as Tesla, UiPath, and Palantir, which she believes are underappreciated but poised for strong growth in the AI sector.
Yeah, Evercore ISI, Goldman, they had been out with their notes early to start the week and last week as well here. So all of these things considered, a lot more affordability perhaps on the mindset of retail investors in Nvidia, especially as it's been talked about by Goldman Sachs. That means is the applications sitting on top of the models that then sit on top of the chips. And so if you've already got the chips, and the chips are going to continue to grow out. You think about the inferential technology that these companies were talking about at Computex a couple weeks back, or just 2 weeks ago, as everyone was saying, sure, we have 60,000 chip data centers right now. That could easily get to a 1 million chip data center. That continues to benefit Nvidia. That's why we have analysts come on our show talking about how, yeah, this market cap that we've seen it get to, this $3 trillion, could just be this still starting point
Which
here.
is crazy.
Yeah.
And especially after the 10-for-1 stock split.
Right.
One question I had was, have we reached a ceiling? Where is there more room to run here? And consistently, we've heard from guests that on our show, analysts, they're saying that there is more room to run. Gaming, automotive, they're two areas of the business that there's some potential growth opportunities there.
Yeah, Nvidia getting the best positioning stature from Oppenheimer on this, from the full stack AI hardware, networking, and software solutions here. So we'll continue to track shares of NVDA throughout the week here.
You were in Nvidia before it was cool. You were buying it at $4 back in 2014. You rode the wave on this particular stock, Cathie, to 330 back in 2021. But the recent rally you've missed, because the flagship ARK Innovation ETF, you sold out of your main stake back in January. Why?
Yes, so if you, we're very positive on Nvidia. We have been very positive on Nvidia. We bought it down when it hit nearly $100 in the fourth quarter last year. And then it tripled as some of our other AI-oriented stocks stood still. So, we're looking at, believe it or not, many people do not believe this about us, we're looking at relative valuations of names in the AI space. And we were looking at Nvidia at 25 times sales, which is where it is, and Tesla, which is probably the biggest AI story out there is at 6 times earnings. UiPath yesterday.
Analysts at Goldman Sachs, also Argus Research, raising their respective price targets. Now, Argus saying that there's continued momentum that we could see for Nvidia shares in 2025 after strong growth in 2024. So, this is a stock that has just been on such a tear, up about 150% year to date. And now all of these analysts seeing a lot more room to run as they go beyond just a data center, but also opportunities in some of their other areas of the business.
So there are puts and takes here, as there always are.
How many frustrated investors have got in touch with you via Twitter or any other forms in which you connect with your own purchases of the ETFs? I mean, there must have been a lot of frustration that you kept it in some funds, but not the main ARK ETF.
Well, I'll tell you what has happened mostly is people who understood the Nvidia story. We were pounding the table on it on 2014, really till 2021. And many people actually put it in their portfolios, their own portfolios, and they may have held it. We have not gotten much pushback. And the reason is people know that we are on AI, but we're doing it in a little bit of a differentiated way. Nvidia has become a check-the-box stock. That's why the valuation is where it is. But we are looking for those plays that have not only the vision from management team point of view and broad distribution, but also proprietary data and AI expertise, really until very recently.
So Palantir you mentioned, or UiPath you mentioned, Tesla you mentioned. There's actually quite a few, though. It seems relatively limited overall AI-focused names that you have. Am I missing something there? Are there far more AI exposure within your flagship fund, or are you really just deciding that there are going to be a few key names that you back?
No, Twilio would be another name. Almost every company, except for, actually even including the multi-omics companies like Exact Sciences, are using their own proprietary data and their broad distribution networks to gather information and create better products and services. So I would say almost every company that we have in the portfolio is in some way, shape, or form. We ask the question, how are you harnessing this powerful tool called artificial intelligence? And I would say 90% of the names in the portfolio are harnessing it and do have proprietary data.
What caught my eye, and we've actually seen so much disruption already to the market capitalization of companies when they have found themselves disrupted by, for example, a ChatGPT. I think of Chegg, the education company, but you noted that Apple, for example, its apps platform could be disintermediated by ChatGPT platforms. Is that a key company that we need to worry about being disrupted? What other names do you think that come to mind that maybe the market has it wrong on how much they could be overwhelmed by this new competitor?
Well, for Google, ChatGPT was either the worst thing that has ever happened to it or maybe the best thing. We tend to think it's going to be disintermediated, though, by ChatGPT and other chatbots. So we're not going to need the kind of search and therefore advertising that drives Google's model. So we do worry about that one. And as you said, Apple, there are many people who think that even Amazon is going to be disrupted not only by social commerce, so people just shopping through Instagram and other social media sites, Pinterest, but it also could be disintermediated as if consumers use ChatGPT and other AI tools to say, I want exactly this kind of item at the cheapest price anywhere in the world. And it would go directly to that source. So, any platform that has served as, an intermediary is at risk, we would say.
Oppenheimer has raised its price target for Nvidia, increasing it from $110 to $150, highlighting the numerous factors contributing to the company's sustained growth. This upward revision comes in the wake of Nvidia's impressive performance, with a stock increase of approximately 150% year-to-date. Analysts from various firms, including Goldman Sachs and Argus Research, are optimistic about Nvidia's potential in 2025, noting that the company has opportunities not just in data centers but also in gaming and automotive sectors. The demand for Nvidia's chips is anticipated to grow significantly, particularly as more applications emerge on top of AI models that rely on these technologies. Cathie Wood, CEO of ARK Invest, has expressed her confidence in Nvidia's long-term prospects while acknowledging the stock's current high valuation. Wood emphasizes the need for careful consideration of relative valuations within the AI space, particularly given the cyclical nature of the semiconductor industry and rising competition from companies like Tesla and Google. While she has moved some of her investments away from Nvidia, she remains focused on identifying undervalued opportunities that leverage AI. As the AI landscape evolves, viewers might wonder, what potential do you see in Nvidia stock moving forward? And how do you think the competitive landscape will impact Nvidia's growth in the coming years?